Hello. Today I'm going to be talking about digital agency accounting issues, and in this first video I just want to talk about some of the questions that I think good accounting for a digital agency should address, and then in future videos I'll kind of talk about how we recommend the accounting process be set up in order to address these kind of questions. So for me, the key questions would be they would revolve around the client's engagements. And so you have to imagine with a typical digital agency, and if you aren't a digital agency, then you don't have to imagine, but in a typical digital agency, you have a bunch of client contracts, engagements as you will, and hopefully they're specified in written contracts what your engagement process is and the terms of the services that you're going to deliver and the fees that you're going to charge and the timing of payments for those services. And so you have a bunch of different client engagements. You might think of them as engagements, or you might refer to them as individual client projects. And so the accounting process really should be able to answer questions about the profitability of those engagements and the relative profitability between each other, the relative profitability of the same kind of engagement, maybe with the same client from one year to the next, and if you don't think of it in terms of just profitability in terms of dollars, but maybe you think about it in terms of, we like this engagement, we think we make okay money on it, but how much time and effort are we putting into it? How much personal energy are we putting into this engagement versus other engagements, and how you might think about or measure that. I think that's ultimately what your accounting system is trying to, or should be trying to get at with information for management of your digital agency. And so the more kind of detailed questions on that might be something like, well, where are you on your client billings? So are you on schedule? Have you billed the client according to the contract on the timing that you said you would bill them? Are you up to date on those client billings, on invoicing the client, I mean? Or and another piece of it is, well, where are you on providing the services? So if you're providing services over many months, have you provided 20% of the services so far? Have you provided all of the services, and you're just waiting for a time period to end to kind of to raise the flag and say you're complete? Where are you in that? Where are you in the services? And then I think another interesting question to kind of consider from a metric standpoint, which the accounting system would provide you the raw data for, is where are you in the services in comparison to your billings, right? Because it may be that you don't bill on the same schedule that you actually deliver the services. You maybe you bill all your fees up front, or maybe you bill your fees throughout the engagement, or maybe you bill your fees at the end of the engagement, but you actually provide the services, on a pro rata basis consistently throughout the engagement, or maybe you provide the services in kind of short spurts at different points in the engagement during milestones, or you have what we would call from an accounting perspective performance obligations that you're satisfying at specific points. So I think that being able to know kind of that mix of how much have we billed versus how much have we served, that information kind of allows you to kind of get a sense on a contract by contract basis or a project by project basis, whether you have what we might think of as an asset with that project or a liability. And when I say an asset with that project, I would mean that you've provided services which you believe you can bill for at some point, but that they've exceeded the amount you've billed so far. If you had a liability with regard to that engagement, it would be, well, maybe we billed everything up front. So we've already kind of billed and asked for payment, but we still owe the services. So we have this liability to consider for that engagement. And I think when you think about how you might manage your workload and your time and your energy, I think understanding where you are position-wise on a contract by contract basis and in aggregate, are we in an overall asset position with all of our contracts? Are we in all overall liability position with all of our contracts, is an interesting data point to have. And so then another more kind of classic thing, another more classic question, which would extend to more than just digital agencies, of course, but digital agencies aren't immune from this question. That is, if you bill your clients, if you send out invoices and they have terms, say 15 days or 30 days or 60 days or whatever that is, where are you on client collections? Have your clients paid your bills on time, or do you have bills that are past due? Do your clients pay immediately? How quickly do they pay? I think that's information that your accounting system should be able to provide for you. And again, all these questions that I'm coming up with, they revolve around kind of the central theme of which of your clients and which of your projects, your client engagements, are most profitable, you know, in terms of which of them generate the most profit and which of them generate the best cash flow as well, is a different kind of question that all of this can revolve around and ultimately answer. From a mechanics standpoint, I'll speak to that real quick, you know, regarding these questions before I let you go on this video and I get back to gardening. I'll just kind of throw a buzzword out there, and that is that for me, in order to really get at these questions, it's really all about what we call WIP accounting, work in process accounting. And that's because when you break it down into the accounting mechanics and how the accounting systems work, any accounting systems work, you have on one hand a income recognition procedure where it's how do we recognize income on the P&L, and that has a certain timing to it. And then you have secondarily you have a recording the invoicing procedure, or how do we issue invoices and record that we have invoices outstanding procedure. And in some very simple scenarios, those two things align. And so you can say, well, the day that we record the invoice to the client is the same day that we actually have income from the client. And so that makes the accounting very simple. But with a digital agency, when you have contracts with variable terms, which most digital agencies that we've worked with are in that scenario, the day that you actually invoice the client is not necessarily the day that you've actually satisfied some performance obligations that would cause you to say that you've earned income, or that you've done the work, so to speak, right? So there's a disconnect in the timing there between earning the income and sending out invoices. And in order to achieve that mechanically in the accounting system, this is really just a mathematical point I'm making, but in order to achieve that in the accounting system, you have to have an intermediary variable. You can't just be thinking about invoices and income and the two always go together. You have to shove something in the middle of that in order to disconnect the timing of those two things. And what it is that you ultimately shove in the middle of that is what the variable that we refer to there on that is called work in process. And so in order to really get the accounting right, to match the timing of income to when you earn it, disconnected from when you're actually invoicing the client, and also get the expenses match that income right, you really have to take on a procedural or a process, an accounting process that I would refer to as WIP accounting, work in process accounting. And what I find with a lot of small digital agencies, or particularly those that maybe were small and now they're graduating into bigger agencies, is that they aren't doing that. They don't know how to do work in process accounting. And so, and if they are doing it, they're maybe doing it in a spreadsheet off to the side, separate from their actual accounting system, because their accounting system, they think, can only handle recognizing income when they issue an invoice, and they know the digital agency as an operator, you kind of know that isn't right. So you're trying to track, well, what's really happening in a spreadsheet off to the side. So what I'm saying with this is that spreadsheet off to the side is an example of what we'd call WIP accounting, and yes, that can be integrated with your general ledger and with your accounting process when you get the right kind of accounting system for your kind of business, what would be typical for a digital agency. And so that's why I say for that digital agency, it's all about the WIP accounting and getting that right. And so hopefully I'll be able to talk about that more in other videos that you can join with me. But for now, I'm going to get back to working on the garden. Take care now.